So there you have it. You saw the applause and reaction when the minister talked about giving a balanced capital gain tax, which a lot of people have connected to the drop in the market, the stock market, for more than 2 weeks now. Well, who better to tell us about this capital gains tax, the new one, the reformed one, which moves from 10% to 30%. But the man at the heart of tax reforms in Nigeria himself, the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Mr. Oyedele. Mr. Oyedele, you've been on the lips of a lot of investors this past few days, especially as we see the NGX bleed. Should we call on you, or should we look somewhere else for the source of this profit taking that has been going on in the market?
Thank you very much, Ini. I think the starting point is just to try and correct some of the misinformation around the tax reform and the capital gains tax implication for the capital market. So I think it's oversimplified when people say we've increased the CGT rate from 10% to 30%. That is not correct. So it's a reform. And that reform means different things to different people. For the majority of investors in the capital market, that would be more than, maybe 99% of investors in the market do not have portfolio that is more than 150 million naira. So from January next year, they'll be completely exempted from capital gains tax. For those who have portfolios more than 150 million naira and are likely to sell more than 150 million naira in a year, there's also another exemption, which is reinvestment. When you reinvest the proceed in any Nigerian stock, then you get full exemption, permanent one, on all the gains you have made. And some of the points that people have been making, or concerns that they have been raising, are not really issues at all, because there are people who say we have made gains for so long, there was inflation, why are you now coming to tax us at a higher rate? What we are doing is, by 31st December 2025, there will be a reset, such that nobody will have to pay any higher rate on the gain they have made up on the 31st of December 2025. When they say that, there's a sell-off because of capital gains tax, the question I ask is, who are the people selling? So if there are people with less than 150 million naira a year, then they are not selling because of capital gains tax. It actually doesn't make sense to sell now. They should rather wait until the new law kicks into effect so they don't have to pay. Is it foreign investors that are selling? No, the data does not support that. The level of foreign participation in the capital market for equity is, according to the NGS report, is around 1.3 trillion naira. That's under $1 billion. They are not exiting. These are the people that we have been speaking to. They are asking questions. Some of them are happy with the reform, because what was happening currently is that even though the rate is 10%, that 10% isolates your gains such that you can actually make a loss and still have to pay the tax. One of our committee members is a tax advisor who advised a foreign investor who exited a couple of years ago, made losses in dollar terms, and still paid capital gains tax of over 1 billion naira in Nigeria. Those are the problems we are fixing. Under the new rules, you'll be able to take into account all your related expenses, including expenses relating to the money you borrow to be able to invest, including your capital losses. Nobody has a portfolio in the stock market where all the shares are just making gains. The current rule that we have, even though on paper it says 10%, it can play out such that you pay 100% of your profits. You can even pay more than 100% of your profits and enter a negative territory because it has no limit. Whereas under the new rule, you will not have to pay taxes on losses, and your taxes will never have to exceed 30%, and once the rate is reduced from next year to 25%. So what we haven't been doing is we have not been producing or providing the complete narrative that is correct. And therefore, people are hearing 30%, 30%, and therefore is driving sentiment, which is almost like a self-fulfilling thing. If everybody thinks that everybody else is selling, and then they begin to sell, and then you have the kind of problems that we're trying to deal with now. So I think it's important for us to get the clarification right and to present it correctly. To present opinion as facts is to create unnecessary problems for the system, particularly for such an important reform as this.
So, Mr. Oyedele, I guess that if you had been talking to us more, these clarifications would have been made earlier. But from your observations, and you did note there, which is a fact, that we do not have a lot of foreign players in our market at this time. It's more of domestic. And then when you see those who are selling off now, do they really hit that 150 million naira annual gains? You know, those will be affected. But what from your observations of what you're hearing is responsible for this aggressive sell-off in the domestic market? I know that's not directly your portfolio, but have you heard of anything?
Yes, the capital market is always an up and down situation. Even after the sell-off yesterday, year-to-date returns is still about 40%. In dollar terms, it's about 50% returns. So this is one of the best performing markets in the world, and we want it to even do better. But there's no market where things continue to always go up. The problem we have created is that after a long run of gains, we had a couple of days of moments of decline where people were taking profit. But we then attributed it to two things. We said it was a capital gains tax, which is not correct. We also said it was Trump and his issue with Nigeria and the issue around genocide and all of that. Now you're going to ask yourself, if people were selling off because of Trump, then those people should be foreign investors, because Nigerian investors will not sell off because of Trump. Otherwise, where would they take the investment to? And since foreign investors were not exiting, then we shouldn't even attribute it to Trump. And I just explained the capital gains tax. It's just normal market cycle that markets go up, market go down. Once we attribute it wrongly, it will then drive sentiment. And that sentiment, in my view, is what led to the significant decline that we saw yesterday. Hopefully, with the clarifications we have put out, people will then take a step backward and make a more rational decision.
So the minister yesterday on the floor of the NGX during the listing of MDF said something about a balanced capital gains tax. What would that look like?
Yeah, so the Honorable Minister said it correctly, which is that when you enact a law, and this is the case anywhere in the world, you cannot put all the details into your laws. Otherwise, you're going to have tax laws that run into 10,000 pages. So usually the way laws are done is you enact them, and by the way, these were bills that were out there for more than 6-7 months. So one would have thought that some of the stakeholders that are now complaining had enough time to make their input. But let's even say they did not. So the whole process is that after the laws have been enacted, we then started the engagement with stakeholders to develop the implementation guidelines. We've had sessions with stockbrokers, we've had with capital markets. I've had like 3 sessions with the foreign investors, one in Washington, D.C., one in the UK, one online with Standard Chartered Bank. So we're having this engagement, and it's an ongoing process where we're receiving input from them about their concerns. And like the Honorable Minister said, all of these will go into the implementation guidelines to clarify where people may have concerns, like the issue of grandfathering for any gains you have made until 31st of December 2025 not to be taxed under the new regime. Essentially, what we are trying to do is to make this market more attractive, particularly for retail investors and foreign investors. So foreign investors will not be paying taxes when they have made losses in dollar terms like they do currently. So that makes the market more competitive and more attractive. And also to ensure that there's harmonization and ease of compliance. The other reforms we have introduced in the capital market, at least major reforms, are more than 10. the fact that even corporate tax rates will come down from 30% to 25% will be headlined anywhere else in the world, but it doesn't seem like we love good news, so nobody is making that a headline news. When you reduce corporate tax rate by even just 1%, it's a significant uplift for the capital market. So in Nigeria today, the FCC said that about $50 billion is going into virtual currency. Over $5.5 million a day is going into gaming and lottery. This is the real competition that we have. The return on the capital market, even in dollar terms, in the past 2 years has been around 100%, better than cryptocurrency. But the message we put out there for our younger people is don't go to the capital market, there's tax. Instead of saying to them, they have been exempted because these guys are not investing 150 million naira, by the way. So if you attract even just half of that fund into the capital market, just imagine what that does for the market. Plus the average age of investors in the Nigerian capital market today is over 50. We are old people there in the capital market. The young people are not there. And now this reform is meant to attract them, but the narrative seems to be the complete opposite of what we are trying to do. So I think we have the responsibility to continue to engage and explain, and we just want more people to try and put out the correct information for the sake of the country.
Mr. Oyedele, obviously we want the correct thing to be out there, and those benefits, especially if it's going to bring in more investments to a market, a capital market, both domestic and foreign. I mean, that's why we're having this conversation now. But maybe you should just tell us more of some of the benefits of this reformed, especially the part that concerns capital gains taxes. That's our focus at this time.
Yes, absolutely. So, capital gains tax is a very, I would say it's a tricky tax to pay, because when people invest and they make gains, they want to keep all of it to themselves. And it's not peculiar to Nigeria. We also look at, leading markets in Africa. The top markets, capital markets in Africa is South Africa, over $1 trillion. And that's followed by Morocco, followed by Botswana, before Nigeria, and then Egypt. All these top markets in Africa have capital gains tax rates, 21%, normal CIT rate. These are things that many countries have done many years ago, and we're just doing it now. And what does that do for you is that the fact that you can have the assurance not to pay tax when you have made a net loss is a significant improvement in terms of the reform. Today, if I just use a simple example, if you have the shares of a bank, let's say Zenith Bank, and you have the shares of Dangote, those are the two shares you have. If you have made gains on one, and you have made losses on the other one, or maybe you even borrow dollars to buy, and you've lost value in dollar terms, by the time you sell, one of it has a gain. We look at that gain in isolation, based on naira value, and we ask you to pay 10%. You may end up paying part of the capital you invested originally. Under the new reform, that will no longer happen. Because what we'll do first is to say, provide your net position. Is it still a plus? Then are there other expenses that you've incurred that you need to deduct? You deduct all of those expenses only when you end up with a net position that is a gain. Are you even going to have a conversation about tax? If you are below the threshold, no tax. If you are above the threshold, just reinvest, and the whole gain is fully exempted because you have reinvested. And we also have pension funds are totally exempt. Reorganization is exempt. We also have the likes of real estate investment trusts completely exempt. In fact, one of the points we have made is this reform is not for revenue generation. The entire capital gains tax that the federal government collected last year was only 52 billion naira. This is not where the incentive we are giving to businesses from corporate income tax rate alone is 1.5 trillion. The input credit that they will get for VAT on their assets and overhead that they never got before is 3.4 trillion naira. So this is actually a reform that is trying to stimulate growth, bring down the cost of doing business, and reduce the risk, including when it comes to capital investment in the stock market. So I think the important thing is we'll continue with the engagement, we'll provide clarification, and then we just want people to also play their own part. by ensuring that they put out the right information.
All right, Mr. Oyedele, thank you so much, and certainly this will be on our YouTube channel, and we'll try to spread it as much as possible to clarify some of the things you have shared with us on the program. And of course, as you have promised, I'm sure there'll be more engagement with the market and other aspects of the investing public. Thank you for your time, Chairman of the Presidential Committee on Fiscal Policy and Tax Reform.
Thank you.
Mr. Oyedele.
Thank you very much.